Good morning, welcome. You're watching Market Cafe on ET Now. I'm Harsh Saita. With me is Snehi Shah. Over the next hour or so, we'll give you a quick catch up on what's happened in global markets as well as what cues are pointing towards in terms of our own Indian indices as well as stock specific action that we can expect in trade today. But let's kickstart, Snehi, the day with what global cues are looking like. What are US and European markets pointing towards?
Well, absolutely, Harsh. Good morning to you and a very good morning to all our viewers. When we look at the global handover, nothing much is coming in when it comes to the US markets. On the other hand, you've got a negative handover coming from Europe. But let's first talk about the US markets in detail then, because stock futures were near flat Wednesday night as investors readied for the final trading days of what's shaping up to be a very weak month and a quarter for Wall Street. We saw a largely flat trading session on Wall Street. All three indices came in absolutely flat, with Nasdaq up 0.2% and you had Dow that was down 0.2%. Meanwhile, S&P 500 was as flat as it can get. Meanwhile, the US 10-year US Treasury yield hit a level not seen in more than 15 years in the session. So that's one key metric to look out for. Friday marks the end of what has been a tough trading month and a quarter. As of Wednesday's close, the Dow is poised to end 3.4% down on the month-on-month basis and 2.5% lower for the quarter-on-quarter basis. The S&P 500 is slated to finish the month down 5.2% and the quarter off by about 4%. The Nasdaq is also on pace to finish the month and quarter losing 6.7% and 5% respectively. So, well, very weak. A weak month as well as quarter coming in for Wall Street. Investors will watch for economic data on jobless claims, home sales and the GDP on Thursday before turning attention to the latest personal consumption expenditure price index reading, which is due on Friday. Now remember, this PCE reading is the Fed Reserve's preferred inflation metric. So well, that's what the US handover is looking like, largely flat, not much happening on that front. Let's focus the European markets then, because they slipped on Wednesday as investors continued to assess inflation, interest rates and the health of the global economy. Now the Pan-European Stock 600 index provisionally closed with a downtick of 0.2% after a muted trading through the day, marking its fifth straight decline and its lowest close since the 28th of March this year. Let's take a look at what other European indices did, and UK's FTSE slipped 0.4% through the session. Germany's DAX was low by 0.3% and France's CAC 40 was absolutely flat. So this is what the global handover is largely looking like. Not much happening on Wall Street, but yeah, we're seeing some cuts coming in on those European markets. But with that, Harsh, let's also shift focus to commodities, because we're seeing some crazy action when it comes to oil prices. Crude has managed to cross that. It's almost at the $95 level. WTI has reached 97. So what is causing this uptick? What's causing this rally?
Well, yes, so there was a whipsaw with regard to oil prices even last week, and that seems to continue. That volatility seems to continue. Now, mind you, it's all started off with Russia cutting oil production, and those production cuts led to a bit of a spike in oil prices last week, and that continues to be the case even this week. What we're seeing, therefore, is oil in fact rose by 3% odd, and that's on the back of US crude stocks actually falling by 2.2 million barrels last week. So that's a 5% of the total crude that is my apologies, that is around 0.5% of the total crude stock that the US actually has. So US has roughly 416 million barrels, and the expectation was that the drawdown will be much lower. 320,000 barrels is what the analysts had expected the drawdown to be like, but it came in at 2.2 million barrels. That's significantly higher, almost 6 times higher is where that stood, and that's one of the reasons why we're seeing that despite the crude stock actually falling, there wasn't enough pressure coming in on oil prices, and that was largely on the back of US releasing some of that crude stock that it had. And therefore now we are seeing that correction in crude. In fact, we're seeing WTI at almost $95 a barrel and Brent above the $97.5 a barrel mark at the moment. Let's quickly also have a check on the dollar index. That's gone, it's crept up above 106 very, very quietly, and despite this creep up, crude has gone up. So that's very interesting because typically the dollar index and crude move inversely. Let's also have a look at where bond yields are. The US 10-year bond yield is now well above the 4.6% mark. Mind you, we did speak even early this week that bond yields are in focus. We are seeing how the FOMC continues to be quite tight when policy stance is spoken about. They are expecting to hike further, and therefore you're seeing that impact on the US 10-year, which has gone up to 4.6%, and we're seeing also an impact on global markets, which also have been weak. So that's the broad take with regard to global cues. The GIFT Nifty not showing much, absolutely flat, probably slight positive bias is what it's indicating.
Well, absolutely, Harsh. We'll also keep a close eye on where these oil prices are headed because, we've been seeing a very strong rally coming over there. But with that, let's also shift focus to all the important cues that you need to be keeping on your radar. And globally today, you've got the US GDP as well as initial jobless claims numbers coming out. Big kind of data, important piece of data coming, so keep an eye out for this. On the corporate action front, then you've got the Nifty and Bank Nifty FNO expiry today. Apart Industries, the board will consider fundraising today, and today is the last day for dividend for two of the stocks, that's Bajaj Holdings as well as Maharashtra Scooters, so keep an eye out for both of these stocks as well. And when it comes to other events, then you've got Accenture earnings will happen today. Ganesh Visarjan is going to happen, which happens to be a big deal in the state of Maharashtra and the city of Bombay where we are based. And you've also got Eid-e-Milad celebrations taking place today as well as tomorrow. Looking at what's happening in the auto space then, BMW will launch its iX1e SUV in India. It's an electric SUV, my bad. So keep an eye out for all of these cues in today's session.
Right, absolutely. And, we'll take it straight to the money market this morning. The benchmark US 10-year treasury yield notched the highest level in more than 15 years. In fact, to be precise, the highest level since 2007. It's breached the 4.6% mark. We did speak about that. And that's amid worries about persistent inflation and tighter monetary policy from the Federal Reserve, of course. So keep an eye out on that US 10-year because it continues to breach its highs.
Shifting gears then, the Pentagon has awarded Elon Musk SpaceX its first contract for Starshield network for a year at the value of $70 million. Remember, the award comes alongside 18 other companies through a program run by the Space Force's Commercial Satellite Communication Office.
Right, and switching gears to the automaker, Hyundai as well as Kia are recalling a combined 3.7 or 3.37 million vehicles in the United States due to risk of engine fires. Remember, a few months back, the automakers had warned the owners to park their cars outside and away from structures until repairs are completed. Now, once again, the warning has been flagged off.
Staying with autos then, Volkswagen's production comes to a halt due to a major IT outage in Germany, halting production of the whole group, which includes the Porsche, AG and Audi brands. Meanwhile, the company confirms the extent of this impact is being analyzed currently.
Right, Snehi, time for a short break on this show. But of course, on the other side, we'll have a check on the Asian markets.
Hi there, welcome back. You're watching Market Cafe on ET Now. Now, Indian tax officials have paid a visit to Chinese laptop maker Lenovo's office and factory, and I'm joined by Sumita Karir, my colleague, on the phone line for more details. Sumita, break this development down for us and take us through whatever's happening.
Officials today visited Lenovo's factory in Bengaluru. Lenovo, remember, is a Chinese personal computer and tablet maker. They visited one of its offices in Bengaluru as part of the inquiry. In fact, officials also inspected laptops of Lenovo employees during the visit, is what is also being reported. They tried to contact Lenovo's senior management during and after the visit as part of the inquiry. Lenovo we did reach out to, and Lenovo says, and I quote, as a responsible corporate citizen, we adhere strictly to all applicable laws, regulations, and reporting requirements in every jurisdiction in which we do business. In fact, Lenovo also says that we're cooperating with the authorities and will provide all possible support required. Now, Vikram, the phrasing is really, really interesting here because Lenovo said that it was a routine visit. But let me once again go through the phrasing and one of those lines. It says, and I once again quote, we adhere strictly to all applicable laws, regulations, and reporting requirements in every jurisdiction in which we do business. Now, which could mean that this case could pertain to some regulatory issue or some reporting issue. We're yet to hear from tax officials and sources. But remember, searches or rather raids of a similar nature have happened in the past as well at Xiaomi's India offices as well. ED seized over 5,000 crores under PMLA, which is related to foreign remittances. Xiaomi, of course, denied the allegations, but then former MD Manu Kumar Jones quit as well. Then searches also happened at locations of Vivo as well. There were searches in 2021 and Oppo's distributors too, who were investigated by IT. And tax evasion allegations were made in how they did business in India. And if we go all the way back to 2020 due to geopolitical tensions, Indian government blocked popular apps on the basis of them compromising the security of Indian users. So the government really making it clear that the security and of the data of Indian users will not be compromised on. There will be no compromise on following regulatory processes. And in fact, a few months back, the government announced a new import restriction policy for laptops and PC imports as a result of security issues again. So this is all that we have on this matter as of now, but we'll be bringing you updates on a very particular
Right, thanks for that, Sumita. But onto an ET Now exclusive. Financial services firms may soon join the ONDC network. We broke this yesterday as well, and they will list their offerings there. Tata Capital, AB Capital are among some of the firms that have already shown an interest. Aishwarya is here to break it down for us.
That's correct. Financial services firms will soon be able to market their offerings on ONDC going forward as per our sources. Few of the financial services firms such as Tata Capital, Aditya Birla Capital, DigiPay as well as EasyPay will be a few of the players who will be providing their services on ONDC. And a few of the spokespersons have also mentioned that more than 50 such financial services firms have approached ONDC to list on the network overall. As we know, ONDC has been providing different kinds of categories and offerings, which included personal care, apparels as well as F&B, even mobility for that matter. In Calcutta, they earlier had started a pilot with Uber and Ola, and that supposedly was a hit is what ONDC had said earlier. But after mobility, the next will be financial services. You will now be able to actually buy, consumers in fact will now be able to buy credit linked products, investment products and even insurance related products, probably even mutual funds, small and medium business loans as well. So this is likely to happen in the next couple of weeks and roughly two months or so. We will now be able to see consumers will now be able to buy insurance and other financial products through ONDC going forward.
Thanks so much, Aishwarya, for breaking that down for us. But we're just getting some news flow on MCX. As you can see flashing on your screen, the new commodity derivatives platform will be implemented from the 3rd of October, and the clearing corporation is planned to conduct mock sessions for the same on the 2nd of October. So that's the news flow we're getting from MCX right now. That's right there flashing on your screen. But let's move forward then. And on the sidelines of the 50th National Management Convention of IMA, the All India Management Association, my colleague Sumita Karir caught up in an exclusive conversation with Umang Kumar, who's the co-founder of Car Dekho. And he says that the huge growth in the new cars business is what he is, that's his forecast, that's on his outlook, and that's what he's hoping for. So listen in to what he had to say.
I'll break our business down.
Yes.
So we are the largest classifieds portal in India. Most consumers who want to research a car in this country would visit Car Dekho or one of our affiliated sites, and that business continues to sort of grow robustly. We are seeing huge growth in the new car business, and that plays out as far as our core business is concerned. We're also fairly large in the used car finance and used car and the overall insurance space in India. And both those businesses continue to see very strong tailwinds in terms of underlying market growth and then structurally our solutions growing. So, we are growing anywhere between 50% year on year to 100% year on year on a fairly large scaled base on both of these businesses.
So there are other players in the market also, small-time players with which you're competing with. What is your plan to sort of go ahead, move further than them?
So one of the unique sort of aspects of our business model is with time we've actually seen competition come down. So on our classifieds business, we largely just compete with one other listed player, and we're by far the most dominant player out there, twice in traffic, probably twice in revenue.
Right.
On the auto financing piece also, we've seen further consolidation in the market and competitive intensity actually coming down.
So what are some of the trends in car purchases, whether used or new cars, that you're seeing? I mean, premiumization as a trend is clearly picking up in several sectors. Is that also getting reflected in your business as well?
So very clearly in the new car business, we're starting to see premiumization play out. If we speak about the top selling cars and average value of vehicle that was selling in 2019 versus what is selling in 2023, there's a sea change, and both electrification of cars, people buying SUVs vis-a-vis buying entry-level segment vehicles, people buying the top-end variant. These are all very prevalent trends, and India is now starting to catch up with global benchmarks of average car value. So we were always far lower than what we saw in most other markets. Now that has a corollary effect on the other markets that we are operating in, be it used car finance, etc. Because the same vehicles that you're selling will end up becoming used cars in 3 to 5 years' time as people start to sell out those vehicles. So that premiumization trend will now play out across all aspects of the auto finance chain.
Right.
Initially it will show up in new car, then in used, then in financial services, because you'll be selling loans or insurance on the same more premium vehicle.
Right, interesting chat coming through there with regard to car deco. Let's quickly move on. The benchmark Brent crude surged above the $97 a barrel mark. We did speak about that at the start of the show, and it's at its highest level since November of 2022. But what's the impact on India as well as Indian companies? Swami joins in with all of the details on that one.
Well, if you see, Brent crude is now trading above the $97 per barrel mark, and this is on the back of two reasons. Firstly, the fact that the US crude stock data fell by around 2.2 million barrels, and this was much ahead of what the street was expecting. Analysts were expecting the crude stocks to fall, US crude stockpiles to fall by around 0.32 million, but the fall is much sharper of around 2.2 million barrels, and that is one of the reasons. And the second reason is the fact that Saudi and Russia have extended their production cut of around 1.3 million barrels per day till the end of this calendar year, and these are the two reasons why crude prices have now surged above the $97 per barrel mark. Now, how will it impact the Indian companies? Firstly, on the oil marketing companies, they will be impacted the most, because not only crude prices are rising, but the gross refining margins are also coming down. Now, because of the rise in crude oil prices, the marketing margins of these oil marketing companies get impacted. In fact, on petrol, if you see, the marketing margins have come down to around 1.7 rupees per litre as against 13.7 rupees per litre that they were earning at the end of the June ended quarter. For diesel, the margins have actually turned negative to around 6.1 rupees per litre as against positive 9.1 rupees per litre that the oil marketing companies were earning in the June ended quarter. For oil explorers like ONDC, Oil India, Vedanta and HOEC, the impact is largely expected to be neutral, given the fact that government could go ahead and increase the windfall tax, thereby neutralizing their realizations on crude oil. But Ceylon exploration could benefit because windfall tax is not applicable on that company, hence higher crude prices would mean higher earnings for that company. Apart from that, there are a host of other sectors and companies that get impacted because crude is one of the major raw materials. In fact, 40 to 50% of the total raw material cost is related to crude, like paint, aviation, lubricant manufacturers, tire, cement, and a host of specialty companies like Balaji Amines, Alkyl Amines, Camlin Fine, Deepak Nitrite, Rosari Biotech, and many others could get impacted because crude is one of the major raw materials for these companies.
Well, thanks, Amit, for taking us through that. We will be keeping an eye out of all of these stocks based on what's happening in the crude prices globally. But let's listen into Feridun Fisharaki, who's the founder and chairman at FGE, and he says that the OPEC has cut back on supply and they want crude prices to stay within that $85 to $95 per barrel range. He also adds that there could be downward pressure on the crude market. So listen into his views.
On the supply side, OPEC Plus has been very diligent, and they've been holding the supplies back. They want to see the prices in the $85, $95 range. And we are close to $95. It probably is going to stay between 90 to 95, maybe a little bit below 90, but I doubt whether it would hit 100 or not. But on the other hand is the concerns about the financial markets. Worries about recession, worries about the Federal Reserve rate increases. And every time one bank goes bankrupt in the US and Europe, then there is all negative sentiments as far as oil price is concerned. But actually, the fundamentals are pretty sound. I think on the downside, probably will not go below 80 because the OPEC Plus will not allow it by trying to control the market. But there could be downward pressure on the market because the demand fundamentals are not going to be the same next year as this year.
Right. Taking the foot off oil, let's quickly look at Godrej Industries. In fact, despite global slowdown, consumer products business in India doing quite well. That's the word coming in from Nadir Godrej. He's of course the chairman and managing director of Godrej Industries. In this exclusive conversation with ET Now's Bhavya Dua, he talks about demand, climate change impact on the palm business, and scope of carbon pricing in India. Listen in.
Generally speaking, demand is very good. For the chemicals, the demand is quite good, but the international situation is a little bit bleak. So wherever exports are high, there are problems. Right. But within India, and our consumer products business in India is doing well. In Africa, we have some challenges. In Latin America, we have challenges as well. But Indonesia is also doing well.
And what is your outlook on global palm oil prices?
It's very hard to predict global palm oil prices. There's both supply and demand, which is badly affected by climate change. And there is also the question of what crude oil is doing. Right. Because biodiesel is very successful nowadays, and biodiesel prices go up as crude oil prices go up, and that drives up palm oil. So I don't expect much change from the present levels, but since there are all these uncertainties, we can't be very sure.
Right. And apart from this, what are your plans about the expansion of the palm oil plantations in India as well as overseas?
The prospects for palm oil plantations in India is extremely good. The government has a very good policy. New lands are being allocated, and it's possible to grow whatever new plantings we make will be of much higher yielding oil palm varieties. So that will push the future growth. And I think in 20 years, India may be self-sufficient in palm oil if everything goes according to plan and the government keeps maintaining its support. There is enough land in India to grow palm oil. Palm oil, as it is grown in India, is highly sustainable. We geotag all our farmers. We give them good advice. That improves the yields. We tell them what kind of fertilizer to use. And it's fully traceable. And as the oil palm tree grows, it sequesters a lot of carbon. So it's a carbon negative crop, which makes it extremely useful as a solution to climate change.
Right. Also, in your speech, in a very poetic manner, you mentioned the sustainable goals that you have till 2025. So could you share some of those with us?
Yes. Many of our businesses are already water positive. That's largely because we have done a lot of watershed development. Watershed development is very low cost, very, very effective. Not only does it provide water to areas which didn't have water, trees are often grown in those places, so carbon also gets sequestered, new livelihoods are created, so there are multiple benefits. In fact, the government should do much more in this field. We are likely to have a water shortage in India, but watershed developments are the solution.
All right, and let's shift focus to aviation and get you the latest of whatever's happening at Akasa, because it's a big relief coming in for that airline, as the Delhi High Court has said that the DGCA can act against pilots under the CAR rules. It's also said that there is no restriction on the DGCA to take action against pilots in the case of the defaults done by them. And my colleague Sameer Dikshit is joining us for more details on this. Sameer, take it away.
The budget carrier Akasa Air, which is going through a tough time, got a relief not just from Delhi High Court but also from Bombay High Court. Delhi High Court in its order mentions that yes, the aviation watchdog DGCA can act against those pilots who have not complied with the CAR rules, the Civil Aviation Requirement Rule. The Delhi High Court also mentions that yes, there is no restriction on DGCA to act against pilot in case of any default. Now, Akasa Air has approached the Delhi High Court after more than 40 of its pilots quit the airline without serving the notice period. But DGCA in its reply mentioned that DGCA lacks the authority to intervene in the employment agreement between the airline and the pilot. But now Delhi High Court has clearly mentioned that yes, the watchdog DGCA can act against the pilot if they have violated or not complied with the CAR, the Civil Aviation Requirement. Similarly, with the Bombay High Court, there was a sigh of relief for the carrier because Bombay High Court has mentioned that they admitted the plea of Akasa Air, and then Akasa Air can proceed for its suit to get the compensation from the pilot who have not served the airline the notice period. Bombay High Court has mentioned that this the suit of compensation it can be taken forward. It has been admitted by the Bombay High Court. Now Akasa Air in its suit in the Bombay High Court is seeking a compensation of rupees 21 crore from 5 of its pilots who have not served the notice period, and now it will lead to definitely some long legal battle between the pilots as well as between the budget carrier. But this was a day where Akasa Air got relief not just from Bombay High Court but also from the Delhi High Court.
Right, thanks for that, Sameer. Also, the upcoming Noida International Airport has achieved a big milestone. The Noida International Airport gets the 3-letter code DXN from the IATA, earlier was called the NIA. They've suggested 3 options to the IATA, of which the International Aviation Body has selected DXN as the code for the upcoming international airport. Now, Sameer is here, of course. In fact, he's filed this report. In fact, he's spoken earlier with Christopher Shellman, who's the CEO at Noida International Airport. Listen in to a slice of that conversation.
We've achieved another big milestone in the project and a sign that our airport continues to develop and continue to mature. We're excited that IATA has awarded us the 3-letter code DXN, which we think is the perfect symbol, the perfect 3 letters that capture capture our location as Noida Airport, a second gateway to Delhi and the National Capital Region, connecting the people and places within India and to the world.
Okay. DXN, what it really signifies in the sense that any specific meaning for DXN and how you want to elaborate it?
Yeah, I think the 3 letters signify the airport's location in Noida, in Western UP, within Delhi, within the National Capital Region, and the X for me is a symbol of connectedness and connecting and bringing people and places closer together.
Okay. Also, if you can just share that, was that the only word that you suggested to IATA, or there some other words as well? And now, since you have got that particular 3-letter word, so what it means for the aviation world? Why this 3-letter word, and what the importance of this 3-letter word?
Yeah, this is the 3-letter code that will be used within air transportation globally in the future to signify and to give like an address or a PIN code to the airport. It'll be used in flight bookings. It'll be used on tickets. It'll be used on baggage tags, and it'll be sort of our visiting card toward the world. And we think the 3 letters DXN are sort of.
All right, with that, let's slip into a very short break. But when we return on the other side, we'll tell you about what the FNO setup looks like today and also talk about all the potential stocks that could be buzzers in today's trading session. So stay tuned. Hi there, welcome back. This is Market Cafe and you're watching ET Now. Now, I'm joined in the studios by my colleague Ansh, who's going to take us through what the FNO snapshot looks like. Good morning, Ansh. We've managed to close above those 19,700 marks for Nifty yesterday. So what does this FNO setup look like and what can we, keep in mind for Nifty going ahead?
Sure. So we'll be talking about Nifty first. As you can see on the chart as well, Nifty tried breaking 19,650 level. Actually, it dipped below that as well on intraday basis, but we saw a good pullback and Nifty closed about 19,700 as you rightly said. This is the fourth session when the Nifty is hovering around 19,650 level. This indicates strong battle between bulls and bears around this level. Let's see what happened in FNO segment. Short covering was seen in Nifty futures with open interest decreasing by around 25%. This indicates bulls getting in shape. Whereas on option front, we saw good put writing at 19,600 strike, indicating good base support here. Whereas on call side, strong call writing was seen at 19,750, which was the same level for yesterday's session as well, indicating some resistance around this level. Now let's see what FIS did. Index futures, they added 13,000 short contract showing their continuation trend of bearishness. This resulted in FII short holding of them rising from 52 to 55%. So in a nutshell, FNO data suggests a mixed signal with FII being a bit negative, despite of which one can expect some positives till 19,650 level stays protected on downside in Nifty on closing basis. Also, this level is a bit above 50 DMA. Not to forget, Nifty mid cap and Nifty small cap are also hovering around their 20 DMA support. So this adds to the positivity in the market.
Right. Thanks for that, Ansh. But you're also giving us all the stocks that are in news that we need to watch out for in news today. So talk to us about those.
Sure. So Tata Power will be the first stock in focus for today's trading session, as company will be setting up 41 megawatt captive solar plant to support TP Solar's forthcoming 4.3 gigawatt solar cell and module manufacturing facility in Tamil Nadu. Apart from this, JSW Steel will also be in focus, as company has successfully acquired entire 50% stake previously held by NSHL in NSL. LIC has divested 2% stake in NMDC, reducing their ownership from 9.6% to 7.6% now. Dixon Technology has entered into an agreement with Xiaomi Technology to manufacture smartphones and related products. Info Edge will also be in focus, as their wholly owned subsidiary has invested approx $500,000 in SkySurf. Oberoi Realty will also be in focus, as company has entered into a development agreement for the development and redevelopment of land spanning around 13,400 square meters. Lastly, NBCC will be in focus, as company has announced sale of commercial built-up space within the World Trade Center of New Delhi, valued at around 5,700 crore. So keep an eye on these stocks.
Absolutely, Ansh. Thanks so much for taking us through the list of potential buzzers. We will be keeping an eye out on all of these stocks, but let's shift gears and look at the August housing sales and demand. The demand scenario, along with the launch momentum, has improved for the real estate sector. But how are the pricing trends shaping up? Vamakshi is here with all of those details. Good morning, Vamakshi. Take it away.
Well, yes, let me first start off with the demand trends that have been seen. We are witnessing that housing sales have sustained their very strong run. In fact, in the month of August, housing demand in India's top 7 cities rose by almost 20% on a year-on-year basis and nearly 8% on a month-on-month basis. Now, out of the top cities, Bengaluru was the best performer. Demand actually saw a rise of almost 55% on a year-on-year basis and 53% on a month-on-month basis. Not just that, like you rightly pointed out, launch momentum has also improved. In fact, it is seeing an uptick of almost 2% on a year-on-year as well as month-on-month basis. Now, again, out here, Bengaluru saw a sharp increase in new launches, up nearly 86% on a month-on-month basis. Now, launches also zoomed in the NCR region by almost 138% on a year-on-year basis, and this was followed by the launch momentum in Chennai, Bengaluru, Pune as well as Hyderabad. But important to note that in the MMR region as well as in Kolkata, the launches saw a drop. Apart from that, when we look at the inventory levels, now demand was seen outstripping supply over the past year, and as a result, the unsold inventory dipped by almost 4% on a year-on-year basis. In fact, inventory pan-India level improved to 17 months in August 23 as compared to 22 months as seen in August 22. Not just that, when we talk about pricing, prices on average were up in major cities, surging as high as almost 28% on a year-on-year basis in the NCR region. Now, as far as Nuvama's view is concerned on the real estate sector, they believe that the sales momentum is expected to improve, especially for organized developers. They are quite positive from a medium-term perspective on real estate stocks, given the increased consolidation as well as improving cash flows. Their top picks for the sector are DLF as well as Brigade. So given the data for housing sales in the month of August, keep an eye out on all of these real estate counters.
So much for that, Vamakshi. But with that, we're completely out of time on this edition of the show. What we're seeing is an absolutely flat but slightly positive GIFT Nifty. At least that's the indicator right off the bat. The market to take all the action forward. Thanks so much for watching.